All right. So all right. Hello, everyone, and thank you for joining us in today's session for a Learn at Lunch with the subject of payments in the metaverse. So, before we start diving into the subject of the metaverse, let's first define what the metaverse actually is. So, the first time the word metaverse was coined was in 1994 by author Neil Stephenson in his sci-fi novel Snow Crash. There, an all-immersive digital world was imagined where the boundaries between the real world and the virtual world were completely no longer existed. However, fortunately for us, we're still a bit far from that vision and have some time to catch up on our sci-fi reading before we get there. However, with the advancements of VR and AR, we believe that our internet experience will be greatly enhanced. Some people might even compare it to the introduction of mobile phones, and it is expected to revolutionize every business sector. So, we've recently published articles about how the metaverse can have positive effects on healthcare and commerce, and we are working on writing articles about the positive effects of this technology in the sectors of advertising, tourism, manufacturing, and education. Is that so? So, naturally, if you want to set up an economy in a digital environment, then you need digital money. So you have a few examples that you might choose for before you start. So you might choose to go for a model similar to the in-game tokens. Here we, let's say, use as examples the V-Bucks of Fortnite or even the AX token of Axie Infinity. So those are very useful when you are offering in-game payment solutions because they allow you to offer items to your customers, and the value of these tokens are guaranteed by the issuer of the game. However, their drawbacks is that they have limited usability outside of the game, and they're basically their value is guaranteed by the operator of the game. So as long as the game keeps on going, then those tokens are valuable, and once the game stops, then basically the money is gone. And if you want to operate such a model, then you would probably require an e-money license. Another alternative that you can choose for is blockchain native currencies such as the Ethereum or blockchain token. Those tokens can be used across many different use cases, from DeFi to NFTs, and even investing in metaverse real estate. They offer you instantaneous settlement, and they can be used also for powering metaverse economies. However, as we've seen over the last couple of years, those tokens are associated with high volatility. And this will always be the case as they are governed by the market demand for these coins. So when demand goes up, their price goes up, and when demand goes down, then their price goes down. So they're not really suitable to provide stable value. And furthermore, with the introduction of MiCAR, we are unsure about how these tokens can be used to comply with regulations and provide AML and KYC checks for the required customers. Another alternative that you might choose to go for is stablecoins. Here we have a variety of stablecoins that are already existing on the market, such as the USDC, USDT, or the UST that was issued by Luna. Those tokens can be used across many different use cases, from DeFi to NFTs, and even also for Metaverse real estate. They offer instantaneous settlement and are great for trading purposes. However, as we've seen with the recent crash of Terra Luna that brought down with it giants in the industry such as Celsius, those coins are often associated with collateralization concerns. And also with the introduction of Mika, we are unsure about how a user or how an economy can be powered by those coins while still complying with AML and KYC concerns. And finally, if you want to offer, let's say, if you want to offer services to your company, if you want to offer services to your users using these coins, then they probably also need to hold cryptocurrencies, which is not very efficient for the purpose. And finally, you may choose to go for a more traditional payment network that currently powers the dollar or euro. With these payment networks, you gain access to all the traditional financial services, along with customer protection and credit card compatibility. However, they are huge. Those networks are associated with huge transaction costs and possibilities of drawbacks, and some of them even require weeks to settle for international transactions. So that doesn't really work for the metaverse scenario. And so what we did was we basically studied this landscape, and then we came up with a stablecoin as a service solution. So our stablecoin is built to offer the customers the advantages of blockchain technology while still being regulatory compliant, offering instantaneous settlement, and our coin is fully subsidized by the euro issued under an e-money license. And finally, we enable features that completely abstract blockchain technology from the user, such as subsidizing blockchain costs. Our stablecoin solution is built with 5 pillars in mind. The issuer of a token is connected to the traditional financial system to ensure seamless value between real world and digital world. This relationship is audited by an external auditor to ensure that merchants and consumers can interact together safely using the stablecoin that we issue. Now let me take you inside our stablecoin offering. So if you choose to build if you choose to power your economy with our stablecoin as a service solution, then what we offer you is the following. We give you a wallet and blockchain database management solution. We give you a comprehensive set of APIs that can be used to create your custom integration. Our solution is fully regulated under an e-money license. We also offer you a 24/7 health check and monitoring dashboard. And we ensure smooth integration between the Web2 and Web3 stack. And finally, we make sure that you are able to comply with AML and KYC concerns with a specific set of tools that we have built to service you. Now, with that in mind, Henry, would you like to give a demo to our clients?
Let me also put my microphone on. Good afternoon or midday also. Yeah, what you see here is the Nexus dashboard, and Nexus is the middleware that connects the traditional financial world with our virtual world. And suppose that I would like to go to do some shopping in the metaverse, and for example, go to this web shop to buy this beautiful Quantos hoodie. Well, unfortunately, I only have 17 euros in my wallet, and that's the wallet that's on my mobile phone. So that's that's not sufficient. So let's look up in Nexus for my account. And as you see, I only have here 17 euros on my balance. So I transfer some money from my German bank account, for example, 100 euros to fund my wallet. So what's actually happening now? The money is transferred from my bank account to the issuer's bank account. And the issuer will now mint 100 euros on digital euros and send them to my digital wallet. And you see, it's already there. And the nice thing with this digital money is that I can instantly start shopping. So let's get back to the web shop and let's buy a hoodie for 50 euros. So I'm going to scan this QR code. I'm not an expert in scanning, but the shirt, yeah, and I'm going to pay 50 euros. So I'm now paying 50 euros to the webshop's wallet, and the webshop's wallet is here on the right side of my screen. So we see a transfer from the left side to the right side, and the payment succeeded. It's done, and you see there is immediately 410 euros on the webshop's or in the webshop's wallet. Well, the webshop might now decide to cash out because it needs to pay the rent, and unfortunately that's not possible yet with the stablecoin. So there is a cash out, for example, of 400 euros. So what's actually happening now? It's the reverse of a funding. So the stablecoins are sent back to the issuer. The issuer will burn the tokens, the 400 euros, and send 400 euros or a bit less to the webshop's bank account. And if you look here, there is a payout of 407 euros. So let's just have a quick look at what happened. There was a request from the webshop to pay out 400 euros, and there will be a payout of 375 euros. So the issuer asks a fee to convert the euros, the stablecoin euros, back into the fiat dollar. So this is something that can be defined in the setup of the system if you want to charge web shops or customers on a cash out. So let me quickly continue my my Metaverse experience. So I would like to visit this DeFi. So this DeFi is a dice game that pays out if it rolls 4, 5, or 6, or I lose when it rolls 1, 2, or 3. So I'm now going to do another payment. Again, I'm going to scan a QR code. Let me say I'm going to gamble. I'm going to invest 5 euros into this DeFi. I pay. And let's see and wait what's happening now. So tension rises. I'm paying 5 euros to the DeFi. Payment succeeded. It's rolling. And unfortunately, I lost. So I can see all the transactions in the dashboard. So for example, here, the token payment, the latest payment I made, from my wallet to the Dice Games wallet, it's 5 euros. And here was the payout. So all transactions are listed in the overview here, and yeah, you might need them to send reports to regulators about how you handle the KYC and AML. Because also in the metaverse, we need to deal with the real world regulation and comply with the KYC and AML rules. So this was a very short overview of the payment infrastructure that we have available for the metaverse. If you would like to read more, then please feel free to visit our website and read more about the metaverse world that we currently support with our Nexus technology. Eli, over to you again.
Thank you, Henry. All right, so thank you for the demo, and again, sorry that you lost the game, but with that, let's move forward. So we're a blockchain company that has been established since 2015. We've worked with many parties on public blockchain projects. Some of them you might know, such as Bitcoin Suisse, Bank Freak, and the others. But we've also worked on enterprise blockchain projects with multiple clients. We include Porsche, Airbus, and BASF as our clients. And this is our team. We're very proud of our diversity, as in our team we include 11 nationalities. And if you're interested to learning more about our solutions, then please feel free to reach out either to my colleague Henry or me on our socials or on our emails, and then we'll do our best to service your queries. And with that, thank you for joining this call, and let's open up the floor for questions if there are any. Yes, Pierre, please.
Yes, actually, I hope everyone can hear me fine because I'm not on my major device now at the moment. Obviously, the system you're showing that's operating, but I could do this also with PayPal. I see the interest from the perspective of the owner of the stablecoin. You're making a margin, but how do I incentivize people to use this? Obviously, also, it will not be with QR codes in the metaverse. You will have some other interfaces in the virtual world. I don't see exactly how I'm going to incentivize shops or even private customers to use this over existing solutions. That's where I have a question, actually.
Yeah. Okay. Yeah. So thank you very much for your question, Pierre. So the big advantage of blockchain technology enabled payments is that they are irreversible. And we expect that in the metaverse, there will be a lot of e-commerce for digital goods. And so digital goods, it's quite hard to revert the transaction. Yeah. So once you have watched a video, no one can get it back from you. And the big disadvantage with payments, like you just mentioned, with PayPal or credit card payments, is that they can be reverted. Yeah, so that's a big disadvantage of all the individuals or companies that provide digital services in the metaverse. Furthermore, the PayPal and credit card payments are still very expensive, especially for micro payments. So there is, let's say, a big need, we think, at least for peer-to-peer payments with extremely low transaction fees that are instantly and irreversibly settled.
Okay, so that's because the example you showed was a quite high transaction fee, so that was just to show the game here.
Yeah, but that is because the Qantas hoodies are that expensive. Huh?
Okay, and yeah, that's okay, I understand. But let's say now you talked about caring about your customer legislation and stuff. For instance, in Germany, you have for most goods you buy over the web, a 14-day automatic right to get a refund without any condition. How would you implement something like that? Because you need to apply, then you said you're still susceptible to legal aspects. So if I'm in Germany,
Yeah, but that
I
does
bought
not,
something.
that holds for physical goods and not for digital goods.
Yes, but the question is, if we talk about a piece of music, obviously, something I understand. But now, if you think about things like NFT things, which become then unique, then they come like something like a copy of physical goods. That's one thing. And also, if I buy a piece of music, it's different. Maybe we don't know how to digital than buying a digital hoodie, which I might want to return because I wanted it in another color or it didn't fit. You know, this is not like the same thing. So, is there a mechanic that, or are you planning to implement systems where you can apply those to? I think it's not a complex technical solution, but do you have this planned?
Yeah, it would be a smart contract there where the payment would be released after 2 weeks to the vendor, right? This is something you can implement, but so NFTs, let's say, is a very special topic where legislation is still intensively being discussed between all kind of legal advisors. So I really like to continue this discussion with you, Pierre, but I understood that there are also some other people that have questions.
Yeah, Danielle has a question, maybe.
Yep. Hi everyone.
Hello,
Thanks for the
Danielle.
nice presentation. I have two questions here because you're talking about blockchain technology. So of course it should be a blockchain behind all this system, and I think it has not been clarified, or at least I do not know which blockchain are you using. If this is a private blockchain or if it's a public blockchain. And connected to this, and talking a little bit about the fees, you mentioned before that there is one part of the fee that can be decided, let's say, by the service provider, the shop, especially in the case of withdrawing. And I understand that the blockchain itself needs a fee in order to process the transaction. So which is the minimum fee in case, let's say, I'm ONG or something like that, and I do not want to charge my client. So my part as business provider is 0, which would be the minimum fee that the blockchain is directly taking from the transactions. Thank you.
So I'd like to pick that up. So first off, this is run on a public blockchain. We do not we believe that the use case of an open metaverse needs to be backed by an open blockchain where anyone can join and transact together, and then the data is recorded on the ledger. That's one. Second question is which blockchain this runs on. Currently, we are running on Stellar and Algorand, but we are also in conversation with Polygon, and we are also in conversation with Cardano to expand our solution. So it depends on where you want to run this solution, then we can also service you there. And then third is your part about your question about transaction costs. Now, in my presentation, I've explained that if you choose to power your solution with a coin like USDC or USDT, then your customers paid the transaction cost directly to the network, and they need to hold crypto. So if they are dealing with, let's say, the Circle coin on Ethereum, then they need to hold the ETH token. But with our solution, we basically subsidize transaction costs for your clients, and they would be then paying for one fee, which is to move, let's say, the transaction cost, but then in one currency, in the currency that they hold. And the final question, so what is the minimal fee if you choose to put your premium on top of transaction costs? Well, that basically would be decided by the network you choose to operate on. So if you are operating on Ethereum, then you need to check the transaction cost there. If you're operating on Cardano, you need to check the transaction cost on that chain, and so on and so forth. Was that clear?
Yep, that is perfectly clear. One last question associated to this, as far as you're using public blockchains. Would it be possible in case of business interest into deploying into a new public blockchain? For example, we are working actively with Celo. I don't know if you have plans to expand to Celo, or if it could be possible, let's say, if there's a real business interest that you deploy in this blockchain.
We are blockchain agnostic, so if there is a real use case and there is a real need for, let's say, to exist specifically on a certain blockchain, then we have no problem discussing that with you. But then we also we've studied the market, and we really believe in the blockchains that we are currently working with and that we plan to expand to, and we think that those blockchains are more fit for purpose.
Okay, perfect. Thank you.
Okay. Then there was a question of how you can get the presentation. We record this session, and we will make it available on our YouTube channel. So there is the Quantos channel where you also can watch other videos about use cases we've been working on. So that will be made available, let's say, in the upcoming days. Any more questions?
Can you discuss your okay? So basically, we received a question in the chat about discussing our collateralization arrangements, and that was by Lewis McKellen. So our solution is, as I've explained in my presentation, is fully licensed under a European e-money license. So we follow the collateralization requirements of an e-money license. So I hope that's comprehensive. And if you want me to expand more on that, then please.
Yeah, so it's 100% backed by the money that has been paid in by the users. Plus on top of that, the 2% that the central banks want you to hold as an extra reserve. So if there's 100 million euro on, we no longer call it stable coins in MiCAR, and we call it electronic money token. So if there's 100 million euro on e-money tokens in circulation, there will be at least 102 million euros on a trusted bank account.
Thank you, Lewis, for joining us.
Thank you, Lewis. Any more questions?
I'm going to ask a new one if no one else is. You're talking about the metaverse. Eli talked about these things, but we know also that the metaverse is going to be something that is going to involve companies like Meta, obviously, who want to make their own coin. We've seen they've tried it with Libra, with Diem, and certainly this is on their agenda. And we know they're talking to Microsoft. We very likely will see other companies also doing their Meta. What is your strategy with regards to those companies, publishers who will be the owners, quote, of those worlds and who are going to try to monetize it? And I think by establishing their own currencies, how do you want to strategically to position yourself in this? Because they will be the gatekeepers for the companies who are might be using your coin instead. So how do you plan to do this?
We have a few advantages.
Yeah, no, you go.
Well, we have a few advantages on our side. First one is, let's say, the reason why the Facebook Libra failed is because the European regulators did not allow them to expand on the market. And what we are doing is basically gaining an e-money license that is in compliant with European regulations to operate. And any stablecoin operator that wishes to exist on, let's say, any electronic money token operator that wishes to exist in this space needs to also be licensed under an e-money license. And then there, it's more a question about who do we partner with, who are our strategic partners, and how do we, let's say, choose to market our solution and sell our solution. And even if it's Microsoft or even if it's Facebook that wishes to launch its own metaverse, they need an e-money license, and they need to go through all of the requirements of European central banks before they can offer, let's say, money solutions in their environments. And so maybe instead of them gaining us, maybe they can come and partner with us and become a client of ours. Who knows?
Okay, so your strategy is to talk to them also.
Yes, yes.
Okay.
Okay, so if there are no further questions, then maybe we can end
5,
this.
4, 3, 2, 1. Okay. Then I would say thank you very much again, everyone. Enjoy the rest of the day. And again, we will make the session or the recorded session available on YouTube within the next couple of days.
Thank you very much.
Okay. Bye-bye.
Bye.